All right, thank you very much. I'm sure students in my undergraduate class who are here will have been glad, they'll be glad for me that Ishrat mentioned inequality. And both Ishrat and Jerry mentioned global public goods, as did Ishrat. And I want to focus on the future of the World Bank in terms of global public goods. So let me start with the bottom line of what I'm going to say. Before I do that, I want to say two things. First, Jerry should tell me when I've used up, say, 15 of 20 minutes or 10 of 15 minutes, whatever it is. The second thing is I wanted to mention, because I have a colleague, former colleague here, who's a CDE alumna, Ana Maria Rodriguez from the Inter-American Development Bank, and I did spend some time at the Inter-American Development Bank, that in 1995, are you paying attention, Robert? The Inter-American Development Bank did its equivalent of the World Development Report, called Facing Up to Inequality. The other interesting thing, and maybe it's related, maybe not, is that the Inter-American Development Bank was at that time a 50-50 bank in which the borrowers held 50% of the votes. Maybe there's a connection.
Is that still true?
Yes, absolutely. So the title of the talk is from a World Bank to a World Development Cooperative, and it's based loosely on an essay that I did with a colleague in Washington at the Center for Global Development at the Peterson Institute, and formerly at the IMF, Arvind Subramanian, with this title, From World Bank to World Development Cooperative. And the idea of this essay was the bottom line of what I'll say today. First, the World Bank should do much more to catalyze development of undersupplied global public goods. And second, the World Bank should become smaller, and will become smaller probably, as a lender in the traditional sense. I could add a little bit in its lending. It could become more like a credit co-op instead of sort of rich to poor, you know, more hassle-free lending, the way you might have if you are a member of a credit union. Now, the main point, though, will be about global public goods, with a lot of background on why lending is likely to fall and perhaps should decline over the years. And I do want to say about this global public good issue and the concept of a world development cooperative that I think, in general, much of what you've already heard has been captured already. I'm not sure what more I will be saying other than elaborating. But the general spirit of this is that we are now in a world in which the idea of sort of charitable transfers of money from rich countries to poor countries is just outdated. At the same time, there are huge development challenges. It's just that they're much more related to overall global problems that do, as Jerry said in his introduction, spill across borders. So that's kind of the spirit of what I'll be saying. Now, this transition that we talk about in this essay, from being fundamentally a lending institution to a greater focus on global public goods, is going to be difficult, and it might not happen. It's going to be difficult bureaucratically, because the World Bank and the regional development banks, for 60 years or less in the case of the regional development banks, their instrument has been the country-based loan with a guarantee from the borrower. That's the fundamental instrument. And so you have a bureaucracy which for decades has been built around lending. And there hasn't been much innovation even in the direction of guarantees as opposed to lending for various complicated policy reasons, the way the incentives have operated. It's also going to be very difficult politically, and this goes to some of what Robert said, because to do more on global public goods requires an explicit new mandate from the members of the World Bank and new capital, in effect to create an endowment of the kind the IMF now has for its surveillance work, which is viewed as a global public good. The IMF now has, in effect, an endowment which will finance the operating costs, the staff costs, of doing surveillance around the world on financial sector issues. So where is that money going to come from? And this goes to a little bit to the heart of what Robert said, and I'll come back to that at the end. But let me start with the issue of traditional lending. One way to do it is to distinguish between the soft money window of IDA that Robert mentioned and the hard money window of IBRD. And the IDA money, for those of you who don't know, it requires annual contributions from, essentially it's been from the traditional donors. This is just a picture from a separate study that I did with a colleague at Brookings, and what it's telling you, you don't have to really figure it out, is that on various dimensions that we looked at for many different donors, IDA does very well. The blue in the middle is kind of the average amongst over 30 different donors in terms of how well they do by various indicators that are weighted, et cetera, et cetera. So the point of the picture is that IDA does a good job at what it does. So that's one of the reasons why it has managed to continue to get contributions. It's a little bit the glue in an incredibly fragmented and messy aid system. But the number of IDA countries will decline, dramatically, frankly, between now and 2025. This is based on work of colleagues of mine in Washington at the center. They used pretty standard projections of growth over the next 15 or 20 years. And so this is the IDA setup today. The countries below the line are eligible because of their low income per capita to borrow from IDA. And this is what it looks like in 2025. What happens is that the number of countries eligible for IDA, assuming the rules aren't changed, would decline from 68 to 31. India, Vietnam, Pakistan, Nigeria, Ghana, Kenya will grow out of IDA in the next 10 or 15 years. And Bangladesh will grow out as well with a little bit of a lag. Okay, so it's an entirely different setup in 2025. And most of the countries that remain will be in sub-Saharan Africa, and most of them, 60%, will be in a category called fragile states or post-conflict states. They're going to be countries with bad governance. That's one simple way to think about it. So if you believe that anyone knows how to do aid well to countries with bad governance, you're probably wrong. I don't think anyone has really figured that out. In fact, the success of IDA is based far more on its lending to countries of the kind that Ishrat was referring to, where they were supporting the good policy changes that in many parts of the world, including Africa, have led to high growth. So for these fragile countries, in the long run, there's no question that humanitarian assistance will probably make sense. There will be security issues, so countries like the US will be all over the thing. Mali is a good example right now. But the World Bank role is really about transformation, development investments that lead to transformation of systems and institutions. And it's hard to imagine how that kind of transfer would be transformative in these difficult countries. So the future of IDA, as we've known it, is unclear, really. That's the bottom line. One reason behind all that is the global reduction in poverty incidence that you heard about. You'll see that Africa, it's less, but East Asia is dramatic. And this is in the absolute number of poor. This shows better. Sub-Saharan Africa has about the same, a little bit of an increase in the number of poor, dramatic declines everywhere else. So, that trend, if it continues, would be taking away, in a sense, the logic, which is great, the logic of IDA from the beginning, from 1960. It's worked. Countries are growing, right? So what about the hard window, IBRD? This shows, I actually have it here, on the right-hand side, the population, oh no, sorry, this is more on IDA, showing you the decline in the number of people. By 2025, at most 1 billion people will live in countries that are IDA eligible. The number now is about 3 billion. So that's the change that we have before us. Now, what about the IBRD window, the hard money window of the World Bank? The idea of this is to show you, this shows it better, that during the 80s, there was an increase. Presumably, this is sort of a loose proxy for probable demand from countries for borrowing from the hard window, which was, the trend was increasing in the 80s. It fluctuated in the 90s, more or less, and then from 1997 to 2005, 2006, it was declining. And this is the period that Robert also referred to when the IMF also saw a decline in the demand for its loans and was beginning to feel that it had no role in the world prior to the crisis. At the time of the crisis, World Bank lending to the middle-income countries did shoot up. No, let me not do that yet. So I think I want to go to this. But this is in a context now in which, oops. Sorry. This is in a context in which overall lending from IBRD is tiny compared to other sources of inflows. What this picture is showing you is the huge increase, of course, in private capital inflows. That's the yellow. What's the blue?
Remittances.
Remittances that were mentioned already. IDA gross disbursements are the tiny little orange line. IBRD gross disbursements are the, what do you call it, turquoise, I guess, the 2%. 2% in 2010. Even in 2010, which was the year when there was a big increase in overall lending. So this is just driving home the point that we're living in a different world. I did want to show you also that one of the problems with IBRD lending is that it has tended to be pro-cyclical, except in during the crisis. This only goes to 2005. It's from a book that Guillermo Perry, who was a finance minister in Colombia, did for us a couple of years ago. But the point here is that the transfers are smaller, and historically they've been pro-cyclical when they probably should have been, in a way, counter-cyclical. You could argue certainly that IBRD lending should be counter-cyclical with respect to borrowers' own GDP. And then at the time of the crisis in 2010, 9 and 10, when borrowing from the IDB and the regional banks and the World Bank, the borrowing did go up, and it was probably a sensible thing to help out, in effect, the IMF, because these banks had some additional resources that they could commit and respond to countries in the face of a global financial crisis. But you need to ask whether, in the medium term, the role of the World Bank is to help finance high-return investments or provide a kind of fiscal safety net. The fiscal safety net is really about closer to the role of the IMF. So the bottom line here is about the fact that there's, in a sense, competition now in the aid and banking business with private philanthropy. By the way, China as a donor, not really shown here, with these individual transfers through remittances. So that brings me to the question of GPGs, and I don't want to show you the picture quite yet, but you have to remind me at the end to show you the picture. So there's an anomaly in the world, and it's reflected in the activities of the World Bank, which are so limited, as I'll show you in terms of global public goods, that we know as economists that the returns to global public goods are extraordinarily high. The well-known example is the return to agricultural research, which was estimated many years ago because of the Green Revolution and other breakthroughs as high as 40%. That was on new strains of hybrid rice and wheat. And we really don't have anything like the same grip on what the returns are, how well government-to-government lending works, and how well aid works. Sometimes it does, sometimes it doesn't. It's very difficult to pin down. You've got Jeff Sachs versus Bill Easterly discussing this and fighting over it. You've got a lot of people in between with a lot of good ideas. But what's interesting is that it's controversial and not entirely clear, and it depends on many factors, the borrower, the conditions, whereas the return to global public goods, like investing in agricultural research, we know is very high. So the question is how to move the World Bank. What is the issue around global public goods? Let me just give two quick examples. I think Ishrat mentioned climate. I mean, it is actually becoming somewhat terrifying that the mission of the World Bank is at risk. The mission to reduce poverty in the world, as stated, we dream of a world free of poverty, is at really grave risk in the face of some predictions of the impact of climate change. I mean, a book done at the center by Bill Klein, very carefully done models of agricultural production around the world, suggested under business as usual, carbon emissions between now and 2070, 60% reduction in agricultural production in India. And Ken Chomitz, I see here, he's worked a lot on this issue. I mean, that's just one small example. The melting in the Himalayas, sea level rise, millions of people. The bottom line is that if you are poor, you do not have the capacity to adjust to the dislocations that could be associated with climate change. And if you are a poor country, you do not have the institutions that enable you to adjust. So the results are asymmetric. So climate change is a fundamental risk to the development project in the large sense. But the World Bank has no particular mandate to deal with climate change with agricultural research. And I'm going to give you a quick example that really got me going on this problem at the World Bank. And it was the development of an idea called the Advanced Market Commitment. Michael Kramer is going to be here tomorrow. Michael Kramer, who'll be here tomorrow, did a paper on the issue of how you generate innovation if you're a funder of innovation. So for example, if you're the NIH and you want to fund a breakthrough on cancer, you push NIH money out the door in the hope that you allocate it well to the right researchers. He suggested, why don't we use pull mechanisms? Why don't we create incentives for the certain kinds of research to be done? That paper sat around for several years. Then at my center in Washington, we set up a working group to look at this issue and consider how would you do a term sheet to create incentives to create a malaria vaccine. There were lawyers, public health people, doctors, economists, people from the pharmaceutical industry. They, did research, kicked things around, and they came up with an idea. They gave it a name, the Advanced Market Commitment. We pushed it out to then members of the G7 and G8. Eventually, it got on the agenda. Eventually, the World Bank was asked to do some fine-tuning and sort out all the legal and money and so on. And the thing got created not for malaria, but for a pneumococcal vaccine. It's a global public good, a pneumococcal vaccine specifically for children in poor countries. It's a certain strain of the disease. There's no pharmaceutical interest amongst the drug firms to develop that kind of thing. In that sense, it's a public good, and it's a global public good because it crosses borders. Why isn't there more of that at the World Bank? There are hundreds of ideas like that, frankly, that could be being generated. But you need to have a mandate. It's true in agricultural research. There's a tremendous amount now being pushed, Kofi Annan, but there's not a lot of money. Let me show you that there's not a lot of money. The big circle is the $126 billion in overall overseas development assistance committed, I guess, in 2009. Only 10% of that went to anything that you could call a global public good. Okay, so that's the first thing I want you to keep in mind. Now, the bank wants to be and is a knowledge bank as much as a lending bank. It has the capacity, it has the research capacity, it has done global knowledge creation, it creates data. Jerry was saying at lunch, you know, he was in the World Bank putting together a data set on crises over historically and across countries, right? It does the cost of doing business surveys, et cetera, et cetera. So a lot of the heft is there in terms of technical capacity. What isn't there is a mandate or an incentive. Now, the other thing I wanted to show you, interestingly, is that if you can follow this, of that 9%, the World Bank, in effect, manages 73% of the money that goes to global public goods outside of its lending activities. So what happens is that the various donors who want to help generate undersupplied GPGs of different kinds, they ask the World Bank to do it. For example, through the climate investment funds that some of you might know of. So the World Bank is seen as a resource. It's becoming like a holding company for doing things that donors want to do, but without an explicit mandate. Now let me finally say, in closing, where would this mandate come from and why doesn't it happen? And this goes to the issues of governance. Ted's trying to figure it out. He'll ask me later. I may not be able to say right now from the top, but anyway, so why doesn't it happen? Let me go to the example again of both of the IDB and the World Bank. Both banks sought recapitalizations in the last couple of years. That is, they both wanted to get more resources from their member country shareholders to increase their overall capital. For the IDB, it was the first time in about 15 years, and for the World Bank, it was the first time in about 30 years, I think. So the inside story seems to be that in the case of the IDB, the emerging market economies wanted to buy more capital. They wanted to increase their shareholdings. But the U.S., which is the major advanced country owner of the IDB, didn't really want that to happen because the U.S. Treasury couldn't go to the Congress for enough money to retain the share that the U.S. had in the IDB. And you hear more or less the same story. I don't know the inside story. Maybe Robert does. You hear more or less the same story about the recapitalization of the World Bank, is that there was some interest indicated from China, from other large emerging markets, to buy more shares and increase their votes and voice, not by the complicated negotiations Robert was talking about, but because they would own a bigger share. And there was kind of resistance from the Europeans and presumably the Americans. So the problem of global public goods is who's going to put up the money. I think in the end, frankly, I have different work that suggests it's a great opportunity for the emerging market economies to say we want a new arm of the World Bank. We will start with $10 billion in capital. It's a pittance out of China's trillions in reserves. Let the others join us. It'll be a separate arm with separate governance, and it'll address these fundamental challenges to the development project. That would save the World Bank from itself, and it would help save the world, and it would ensure better development, faster development, and better lives for more people. Thank you very much.